Dude, I'm so freaking excited and happy right now. I don't know how I'm gonna make this video, but this changes everything for UnitedHealth stock, and I'm not exaggerating, because it's just been revealed that Warren Buffett and Berkshire Hathaway, they just bought into UnitedHealth, $1.5 billion worth of their stock. And we'll get into that. But first, I wanted to say congratulations to every single one of you that bought into the UnitedHealth stock dip. If you did, you probably have the biggest smile on your bald head right now, and I don't blame you because I'm right there with you. I'm so freaking stoked. Let's get into it. All right, so this article is from Reuters. Buffett's Berkshire acquires 5 million shares in UnitedHealth. It was just posted 3 hours ago, August the 15th. But between you and me, I prefer this article because it goes a little more into depth. So Berkshire Hathaway 13F filing reveals Warren Buffett's secret stock. So there's been a lot of anticipation and rumors as to what it was going to be. Some people were saying that it was going to be SoFi, the fintech company. Other people were insinuating that it was going to be Palantir or even Google, but deep down inside, I stayed quiet because I was like, you know what? I think it's going to be UnitedHealth Group. But anyways, let's skim this article together. So Warren Buffett's Berkshire Hathaway revealed a position in embattled healthcare giant UnitedHealth Group. Why are they saying embattled? Because for the past 1 year, there's been nothing but scandals, setbacks, regulatory probing, and everybody is just peeing on top of the head of UnitedHealth. This is a really beat up stock. But anyways, at the end of the second quarter, so from the months of April, May, and June, Berkshire Hathaway now holds 5 million shares of UnitedHealth Group, valued at about $1.6 billion. I think it's closer to $1.5 billion, but we'll look at the nuances here in a little bit. And this part right here makes me giggle like a little kid before Christmas. The company has been likely accumulating shares since the fourth quarter of last year, when it first asked regulators to let it build a position in secret to avoid a price spike. Now, why are they doing that? Because as they saw UnitedHealth Group stock price being crushed and hovering around their 1 year low, they wanted to continue dollar cost averaging into it at a low price. Because if the secret got out, like, oh my gosh, they're buying into it, then the stock price would have been inflated and they would no longer get a good deal. Guys, I don't think you understand. This is really freaking huge. You cannot underestimate the power and influence of Warren Buffett and Berkshire Hathaway. Because the secret is out that it's UnitedHealth Group that they've been buying up, more and more investors are going to be piling their money into UnitedHealth because now it has Warren Buffett's seal of approval and confidence. And sure, I hear you. Not every investment that Warren Buffett has made in the past has been a home run, but hey, his track record is pretty darn impressive. And to be on the same team as Warren Buffett, dude, I'll take that any day of the week. It's like having prime Tom Brady when he used to play for the Buccaneers and New England Patriots on your team. I would have Tom Brady on my team any day of the week, fantasy football. I'm pretty stoked. So Warren Buffett and I, and you, we're all seeing eye to eye that this is a hidden gem, undervalued, high quality dividend compounder with cheese. Dude, sign me up. Obviously, taking a look at their stock performance right now for the past 1 year, it's a rough situation. They're down by negative 53%. So if we take a look at when he started buying a position into them, it was probably somewhere around here when they saw that initial dip go from about $600 down to $485. He probably put his first $200,000, $300,000 into UnitedHealth. And as it continued to dip, I am sure that he was dollar cost averaging into every single dip, as I did as well. Let's look at the details a little closer. So right now I'm on a website called Valuation. It's basically where you can see the portfolio holdings for all of the different various hedge funds and super investors. And the 13F, by the way, is a filing that every super investor needs to publicly disclose so that there's no market manipulation. And that's why we get to see it after the fact, not in real time. But hey, at least we still get to see what Warren Buffett has been doing in the past 90 days. Now, is this big enough for you guys? Let me zoom in a little bit more. So this is the Berkshire Hathaway portfolio. As you can see right there, UnitedHealth Group It makes up about 0.61% of the portfolio. They have 5 million shares of UnitedHealth Group. The average cost basis is $311.97. Simplicity's sakes, let's just break it even and say $312. As of right now, they're currently trading for about $271. So even Warren Buffett daddy is in the red by 13%. And you're sitting over there worried like, oh my gosh, are they ever gonna make a rebound? Is this a good bet? Is this a good company? Dude, relax. Even Warren Buffett is in the red with UnitedHealth, and his average cost basis is probably higher than yours. If he thought that UnitedHealth was undervalued and a great buy at $312 a share, dude, you're okay. You're gonna be fine. So what we see right here is the 2025 Q2 13F for the months of April, May, and June. So that's what his portfolio looks like since June. I'm telling you right now, I could be wrong, but I'm positive. If he had an average cost basis of $312 a share, no doubt in my mind, in the months of July and August, as UnitedHealth went on that dip down to like $250 a share, I am positive that he bought even more shares and dollar cost averaged. And I'm positive that in the next Q3 13F filing, his average cost basis is probably going to be somewhere around like $280 or even like $260 a share. You can quote me on that. I could be wrong, but just for fun, that's what I think, understanding the mentality of Warren Buffett. Because if he thought it was high quality and a bargain and a discount at $312, once he saw it go down to $250, I'm positive that he bought more shares. And just to remind you once again, when you look at the amount of cash that Warren Buffett and Berkshire Hathaway has right now, hopping over to their balance sheet, they have $344 billion of cash and cash equivalents on hand. So he has a lot of gunpowder to pull the trigger and buy whatever he wants whenever he thinks it's a good deal. So which begs me to believe that he also dollar cost averaged into UnitedHealth the exact same time that you did and I did. So I feel pretty happy right now. And it's not just Warren Buffett. Something else that I want to call out is other super investors also bought into UnitedHealth. The first one I want to talk about is David Tepper. He's the owner of the Carolina Panthers of the NFL. If we hop on over and do this alphabetically, wow, there you go, UnitedHealth Group. His average cost basis is also $312 a share, which is kind of weird, but he bought $764 million worth of UnitedHealth Group. But it gets even better. So his hedge fund is called Appaloosa. Michael Burry, the guy that was famous for predicting the financial crisis of 2008, 2009, he also just went long into UnitedHealth Group, which I think is pretty bonkers. So you have all of the big brain geniuses on the same page saying that UnitedHealth is undervalued. Michael Burry, his average cost basis for UnitedHealth is also $312 a share. So friends and family, dude, I'm stoked right now. But how is the market handling this? What's their reaction? Check this out. So at the end of the day, on August 14th on Thursday, they closed at 271. But in the aftermarket hours, they're already up by 10.6% and they're $300 a share. I am so freaking stoked right now. They're $300 a share. The momentum is not going to stop here. Now that the stock market realizes that Michael Burry, Warren Buffett, and David Tepper are piling in their money into it, they're going to follow suit. Because I think up until this point, it was mostly the amateur investors like you and I and retail investors that were buying into UnitedHealth, whereas the big money, they were on the sidelines like waiting like, okay, who's going to be the first one to pull the trigger? Now we know the one that pulled the trigger is the most influential investor of all freaking time. All that to say, if you bought into UnitedHealth Group at $280 a share or even $270, it was probably a rough time for you for the past like 2, 3, or even like 5 months, right? And that's understandable because nobody, unless you're a freak and you like pain, nobody likes watching their investment go down in the red week after week or stay flat. It's not a good feeling. And even in my own personal portfolio, UnitedHealth was by far the biggest loser. I think at one point I was down by like -11, -12%. That's a lot of money, dude. But the thing is, it does not take a rocket scientist to realize that UnitedHealth, ever since about May, since their first sell-off, that they were absolutely undervalued. Because I think their trading multiple at the time was like a single-digit PE ratio of like an 8 or a 9 for UnitedHealth Group. I'm going to review why that was bonkers and absurd. When you take a look at their revenue growth year over year, take a look at this. 2015, $157 billion of revenue, top line, gross sales, all right? And look how it evolves year over year. Trailing 12 months, despite all of the scandals, despite all of the setbacks, they're still posting revenue of $422 billion, which is a growth of 9.7% year over year. And it gets even better because as we jump on over to their free cash flow, take a look at this. This is exactly what you want to see in a high quality company. The free cash flow growing up and to the right. Okay, they had a fluke year in 2024, but in 2025, it's right back to where it was. The momentum is going up. And when you take into account their float, the money and cash in their account that they have invested into treasury bills or into a money market fund or whatever, right now it's $55 billion of cash on hand to do like insurance claim payouts for scandals, for whatever it is, they have $55 billion. It gets even better. I'm not done. When you look at their dividend profile, a 3.2% dividend yield, historically for the past 20 years, their dividend yield is usually, it fluctuates around like a 1.5 to a 2%, which means to have a dividend yield of a 3.2%, that means their stock price was absolutely crushed, which artificially inflated the dividend yield. As you can see on your screen right now, for the past 20 years, on average, their dividend yield has been 1.47%. And the natural argument to that would be, hey, because the dividend yield is so high, it's not going to be sustainable and it's going to be cut anytime soon. First of all, Negative Nancy, sit down. Because when you take a look at their payout ratio, it is a 36.8%. Meaning from their bottom line, their profits, their earnings per share, they're all the same thing. 36% of it is utilized for the dividends. Meaning they have an excess of about over 60% left over to reinvest into the company, to pay their workers a fair wage, to expand the business. And before you think I'm delusional and crazy, dude, they're growing this number right here, this payout of $8.84 at a rate of just shy of 10% year over year. You tell me, at your job, do you get a pay raise of 10% a year? No. Most of us were lucky to see a 1, a 2, a 3%. They throw breadcrumbs at us and they expect us to go on our knees and say, thank you, thank you. Dude, with UnitedHealth, our pay raise by investing into them, the dividend, 10% a year over year. And you might be like, oh, that's just for the short term. They can't be doing that all the time. Oh, really? Because take a look at the visual depiction of their dividend payouts. In 2015, you essentially got 50 cents every 90 days or a quarter. Look how it grows consistently up and to the right, time and time again. So with UnitedHealth, not only are the financials, fundamentals, dividend profile, everything sound, it just makes no sense for their valuation to be this freaking low. Whereas on the other hand, when you have companies that are trading in the stock market with a PE ratio of a 600, make that make sense right now. I'm waiting. Make it make sense. You're telling me that Palantir, a company that generates $3.4 billion of revenue in a single calendar year, should be valued at $430 billion? How does that make any sense? I have a small p smooth brain and it makes no sense to me. Because if we jump on over and look at UnitedHealth, keep that number in mind, right? Their revenue is $422 billion a year, and their market capitalization is $245 billion. That makes no sense. And that's exactly why, probably you as well, I bought into the dip. Especially so because I love to buy high quality dividend compounders near their 1-year low. So if we zoom out and take a look at their stock price chart, dude, this is a company that has been consistently and reliably been compounding except for the past like 3 to 4 months. For me, when I saw that dip, I was like, dude, that's a buying opportunity. Thank you, Santa Claus. And as I bought into UnitedHealth right here, I just bought and held. buy and hold. When it comes to high quality dividend compounders near their 1-year stock price, I buy and I hold. Yes, it did not feel good watching their valuation drop further and further into the red. I think at one point they were like $230 a share, which I hear you. The natural argument against that is, why do you like buying into and catching falling knives? UnitedHealth, dude, they're gonna go bankrupt. There were people literally commenting on the videos saying, dude, this company is gonna be $100 by the end of the year. They're gonna be bankrupt by 2026. You're an idiot, you're a lunatic. Go read the comments. I did not delete any of them. And because of those folks, they actually motivated me to do my own homework and research to figure out, dude, am I making a grave mistake here? So I just uploaded a video with evidence and data that supports the idea of buying the dip into high quality dividend compounders, because the data speaks volumes as to why my strategy and investment philosophy is the way that it is. Go watch that video if you haven't had a chance, by the way. So between you and me, I think it makes a ton of sense as to why Warren Buffett bought into UnitedHealth Group. He loves the insurance industry, which by the way, I made a video on. Go watch that if you haven't. But he also loves, just like you and I, to buy into high quality companies when they're on the operating table and they're getting surgery because they have injury after injury and their stock price is absolutely crushed. I think he's the same guy that said, I love to buy a wonderful business at a fair price, meaning to buy a company with a margin of safety baked in when it's undervalued. That's what he likes to do. I mean, even if you are a troll or a hater of UnitedHealth Group, it makes no freaking sense for their price to earnings ratio to be an 11.7. It makes absolutely no sense. For instance, it's like saying a Tesla Model Y, the 2023 or 2024 one, and it's being sold on Facebook Marketplace for like $3,000. It has a clean title and only 20,000 miles on the odometer. And because you're paranoid, you bring your friend that's quote unquote a mechanic, even though he only watched YouTube videos to figure out if a car is good or not. He comes along with you to check out the car in person, and everything turns out to be fine and perfect. That Tesla is a heck of a bargain. That's exactly the same way that I felt about UnitedHealth. I know I felt crazy at the time. I was like, dude, I'm about to put thousands of dollars into this company. If it goes belly up, I'm doomed. I'm doomed. However, based on the financials and fundamentals and based on the data, having that on my side and now having Warren Buffett daddy go on my back, dude, I'm giving a 96, 97-year-old a piggyback ride. Dude, we're going all the way to the moon together. I'm so freaking stoked. But anyways, before I get too excited, now I want to show you my position and reveal my average cost basis of UnitedHealth Group. I'm not Warren Buffett, but hey, some of you are curious and I would love to share with you what I'm working with. So what you see on your screen right now is a snapshot of my holding in UnitedHealth. My cost basis, I have about $10,000 invested into UnitedHealth Group. Dude, I'm telling you right now, I make about $3 to maybe $5 per video that I upload. For a guy like me who does YouTube full-time, making that little of a money, to put that much of the money that I have into UnitedHealth, you have to know that my conviction and belief into this company, I know that they're undervalued, and I have a huge belief that in maybe 2 to 3 years, they're gonna be back up to $600 a share. But on the other hand, if we break $10,000 down, my average cost basis per share is $271. I initially started my position into UnitedHealth when they were about $289, and then I just continued to dollar cost average 1 or 2 shares every week as they kept going lower and lower. So I did buy some shares when they were about $240 as well. When you round it all out, I'm at $271, and it feels kind of weird because Warren Buffett daddy, his average cost basis is $312. But I'm assuming when the next Q3 13F comes out, his cost basis will probably be lower than mine. And UnitedHealth has been a part of my portfolio for the past like month and a half. My total return so far is 0.17% into the green, total profit of $16.82. Woo! But tomorrow, when you guys wake up, I mean, in Japan here today, it's Friday morning already. However, when you guys wake up, I'm guessing that UnitedHealth will start the day at $300 a share and then probably close at like $305 or $310. I think the momentum is going to continue to keep rallying into Friday and then into the next week. Speaking of which, on a side note, I am not Japanese or Chinese. I'm actually a Korean guy that lives in Japan, if you can't tell by the jersey that I'm wearing. And something else that I wanted to mention that's on my notes before I forget, with UnitedHealth, I don't think you guys understand. To buy into this company, I can't just make money appear out of thin air, right? So because I saw the buying opportunity for UnitedHealth, what I had to do was I had to sell out of AMD, Norfolk Southern, and Visa in order to free up capital and deploy it into UnitedHealth. So this wasn't some willy-nilly like YOLO money. For me, it was a calculated decision, like my ROI into UnitedHealth at $250, $260, $270 a share. I am going to have a better and a bigger total return than keeping my money into those three positions. And the best part is, as you can see by the bottom of your screen, their dividend profile. They pay a juicy dividend. So even though this past year, their dividend growth rate was just shy of 10%, when you take a look at the 5-year CAGR, they've been growing it at 12.5% for the past 5 years, annualized year over year. And so you're telling me that for my troubles of investing into UnitedHealth in the face of people calling me an idiot, that I'm going to receive a dividend from them? Dude, sign me up. That's exactly why I'm a dividend growth investor. Because not only am I going to get the share price appreciation, but I'm also going to get a cash payment check, passive income from them saying, hey, thanks for being a shareholder. So on September 23rd, unless I decide to buy more shares of UnitedHealth, I am going to expect $81.77 in dividends from UnitedHealth Group. I'm telling you right now, that dividend is enough for me to kiss and make up with them. Yes, I had some nights where I did doubt myself. I was like, dude, am I making a good decision here? I just put 10 grand into UnitedHealth and I'm in the red by so much. What am I doing? I had those nights, but I'm so relieved to know that the best investor of all time is on my side. It's like my only regret right now is that I did not buy more shares. And I couldn't because I just don't have the money to do that. But I am glad that I put my money where my mouth is. I am literally walking the talk and it feels so good. Have you ever experienced that before where you bought into a stock where everyone is saying that it's crap, it's ugly, it's smelly, its shoe size is like a 6, small feet, oh my gosh, you're investing into small feet, and you're like, dude, I'm still gonna invest into it, and then you ended up being right? It's like a top 10 best feelings in the world that you can experience. It's an unbelievable feeling. And by the way, I do have receipts. Just go check the videos on my channel. I kept talking about UnitedHealth again and again, and whenever I did an individual company stock analysis, and I did a breakdown of that company in question at the end, and I did the compounder chart where I evaluate companies from the best to the worst, I kept saying that UnitedHealth was a certified compounder. And to say that while the company was experiencing a sell-off, it didn't feel good, but hey, in the end, with enough time and patience, everything works out. Right? And I think that's a true lesson in life as well. Everything ends up being okay in the end. Unless, of course, you YOLO'd all of your kids' college education funds into Intel like 5 years ago at about like, what, $47 a share, now it's 23 bucks. Then I guess, you know, that could be up in the air. So I guess in the realm of stocks, as long as you buy into a high quality company, eventually things will be okay. But in most matters in life, things will be okay, regardless of high quality or not. I don't know if that makes sense. But again, I just want to give a big shout out to all of the folks that did, in fact, buy into the fear, the scandals, and the uncertainty of UnitedHealth as they were experiencing a sell-off. Because I'm telling you right now, I think in the next week or so, UnitedHealth could possibly be 320 again. I'm not a genie in a bottle. I can't tell the future, but based on what usually happens, the ramifications of Warren Buffett publicly disclosing a position, everybody likes to copy him on Wall Street and other investors as well, which means more money piling into UnitedHealth is going to raise their stock price. There's more purchases than there are sales. And hearing that, if you have a ton of shares of UnitedHealth, you're probably a happy camper that's fishing by the river. Yeah, I don't blame you. But on the other side of the argument, if you're still a hater of UnitedHealth and you think they're a trash company, to be honest with you, I think that's a fair take because morally, you do have an argument. However, financially and fundamentally, as a business operation, absolutely not. UnitedHealth is as high quality as it comes. All that to say, in terms of their inherent worth and stock price forecast, I actually made a video on that topic that I uploaded a few weeks ago, but I think as of right now, it should easily be towards the right and on the bullish price targets that I outlined in that video instead of the bearish realistic ones that I said on the left. So I do think now UnitedHealth should be on the bullish scale of price forecasts that I calculated in that video. Anyways, before I head out of here, I just wanted to let you know that I love you guys because I have been noticing that the channel has been growing in numbers and across all metrics, and it's just a really good feeling. And I'm so glad that we're on this ride together because I noticed the comment section, it's always the same folks and the community is just growing by the day. So I just wanted to say thank you for all of the support, gentlemen. It means a lot to me. I love you guys. Stay safe. Good luck in the stock market, and let me know what your plans are with UnitedHealth stock or your feelings towards the company. And I'll talk to you guys next time. Peace.